What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we finally saw a little bit of selling. Will the selling continue or was it just a one-day event? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we dropped about 0.5% today, but the price action continues to close over top of the 5 EMA. You can see we did get rejected off of that price target ever since we hit 417. We did see that pullback going into today. But the question is this going to be that 2 to 3 days of selling, or was this just a price action rejection off of a resistance level before we go back up and retest that level for a possible breakout? Remember, we do have one more price target above at 420, and if we do break above 417, we're very likely going to see SPY levels of $420. Now, the number one thing to watch going into tomorrow is to see if we see any pickup in the selling. We did not see an increase of volume today, but we are starting to see an increase of volume ever since we had that low volume melt up. So this could have been the first day of selling, and we might see a continuation of this going into tomorrow. The number one way to know is going to be to watch the 5 EMA. If the price action gets below the 5 EMA and then struggles to break back above it, that will be an indication that the sellers are taking over and we're not likely going to see higher price targets in SPY until we see this pullback. Now, pullbacks typically mean 2 to 3 days of selling, and they're not the same as a stock market correction. Remember, a stock market correction is somewhere between about 5 and 15% of selling, and a pullback is somewhere around 1.5 to 3%. I'm still in favor of more of a 1.5 to 3% pullback and then continuation to the upside. You can see we still have a very strong bull trend, so there's no reason to try to call a top on this market, and there's no reason to believe that 417 was the top in SPY, and now we're going through a major correction. So let the trend be our friend, and let's continue to watch the price action. So watch that 5 EMA, which is right around 414, and then I have other support levels I want you to pay attention to at 412 and 408. You can see the 20 simple moving average is now at 403, and it's crossing through that gap, which means we're not likely going to fill that gap until we see a stock market correction. So don't pay attention too much to that gap because this bull trend is only picking up momentum, and we're not going to go all the way down to SPY levels of 400 without a stock market correction. Now we'll know we're in a stock market correction if we start blasting through these support levels at 412 and 408. So we need to see more price action to figure out if this selling is going to pick up momentum. But right now, you have to assume that the path of least resistance is still to the upside, and this is a very strong bull trend. So don't expect to see a ton more selling before we continue to new all-time highs unless something else changes in the stock market. On the NASDAQ 100 Triple Qs ETF, we did see a price action close below the 5 EMA today, and we did drop about 1%. We did hit that price target on the Triple Qs of about 341, and now we are starting to see some selling off of that resistance level. We can still see we're on relatively low volume, so there's no indication that we have the big money sellers in this market just yet. Obviously that can change and they can start the high volume selling at any point. So remember, the market takes the stairs up and the elevator down. So the Triple Qs look a little worse than the S&P 500 because the price action did close below the 5 EMA. However, that could just reverse as soon as tomorrow, but it's also possible we see a continuation of the selling for another couple days. So downside support levels to watch on the Triple Qs are going to be 334, the gap close at 332, and the next support level at 330. The 20 simple moving average is now around 328, and it did cross through that gap at 325. So again, I don't expect to see these gaps filled until a stock market correction, with the exception being that we could still fill the gap at 332 and still maintain a higher low in this bull market. Remember, bull markets are higher highs and higher lows, and we're still in the process of potentially putting in a higher low. We already have the higher high because we're at all-time highs, and we haven't yet really seen a sizable pullback to form that higher low. So upside resistance is going to be right around 342, and we did validate that we're likely heading to the next price target at 350. So there still is gas left in the tank for this bull market, and we are still likely to see all-time highs after this pullback completes. So remember, follow the trend, and the trend is still very bullish. So we're not calling a top, and we're not becoming bears and trying to short this market just because we're expecting a small pullback. It's a better opportunity to buy the dip and get ready for the next leg higher in this bull market than it is trying to short a couple percent move to the downside. There's a lot more upside than there is potential downside right now because we're still in a very strong bull market. On the Dow Jones, we dropped about 0.32% today. And again, that's after we met our price target at 341. So we're seeing a rejection at these price targets on all three indices, and we are seeing a little bit of pullback today. Again, the price action is closing above the 5 EMA, and on the Dow Jones, we still have a very strong bull trend. We could have support on the Dow at the 5 EMA around 340, the 13 EMA, which is right around 337, and the 20 simple moving average is now around $333. So we have plenty of support on the downside for the Dow Jones and still maintaining a higher low. All of the indices just put in all-time highs last week, so it's no surprise to see them cooling off just a little bit. On the Russell 2000, we see a lot more selling today, going down 1.30% and still looking like we're trying to maintain that bullish breakout. All of the moving averages are still stacked to the bull side, but we don't yet have a positively sloping 20 simple moving average. The price action did find support right above the 50 EMA, and the price action did close above the 20 simple moving average. So upside resistance for the Russell 2000 is going to be up here around 227, 230, and 233. However, we still have to get through the previous daily high, which is right around $225. So we have quite a bit of upside resistance, but we do have downside support at the breakout around 222, the 20 simple around 221, and the 50 EMA is now right around $220. So there's about 3 levels of support, only $1 apart on the Russell 2000. So this is a pretty decent entry for a long trade, as long as you know that your risk is defined by a close below the 50 EMA. On the Arkk ETF, we dropped over 3% today, and Cathie Wood's ETF is still getting beaten up, closing below that 20 simple moving average. The price action did close below all of the moving averages, which is never a bullish indication, and the moving averages are still not trending to either direction. So we have a sort of neutral, choppy market in Arkk, and every time we get a decent price action move to the upside, it's completely erased over the next few trading sessions. So right now I'm looking for Arkk to potentially close the gap at 115, and then the next support level is going to be the support trend line right around 112. Upside resistance is all the way from 120 all the way up to about 126. We need price action back above the 50 EMA at 126 for Arkk to start going back into a bull market. On the VIX, which is our fear indicator, we did see a spike today going up about 6.40%. At one point, we were trading above 18.2, but that level did act as a resistance, and we did see the VIX closing around 17.3. We did get the VIX closing back above the 5 EMA today, but it's still in a bear trend and it's still holding up below resistance. So we still want to give favor to the bulls right now because this is still a low fear environment that favors all-time highs. Remember, if the VIX spikes into the 20s, that likely means that a stock market correction is upon us, and that means fear is starting to spike as the selling picks up. But right now, we don't see that spike in the VIX just yet. So as long as the VIX is staying below 18, it's still going to be a bull market, and it's just a little bit of a pullback and a little bit of fear during that pullback. On gold, we did hit our price target today at $17.76, and we could see a pullback now back to support right around $17.61. The next price target above is at $18.26, but we need a price action break and close over $17.76 before we get there. You can see a bull trend is building up, and gold is starting to look like it finally bottomed and it's getting ready to head higher. On silver, our next price target above is around $26.50, and we did get a little bit overextended outside that upper Bollinger Band, and we saw a retracement. Looks like we're currently finding support over top of the 5 EMA, and we should have support at the 50 EMA right around 25.60. We still need a bull trend, and the 20 simple moving average still has a lot of ground to make up to cross back above the 50 EMA. So look for silver to sort of chop around in here while the moving averages catch up, and then look for a push to the next price targets higher as these Bollinger Bands expand. On Bitcoin, we're seeing all kinds of volatility right now, and currently Bitcoin is pretty flat, down less than 1%, and holding up above support at the 50 EMA, which is right around 55,700. The bull trend is no longer intact because the 5 EMA and the 13 EMA are now crossing below the 20 simple moving average. And now price action is going to be very key to see if it can hold up above critical support. So if we do get a price action close on a daily close below the 50 EMA, we're going to see a waterfall wave of selling and a huge correction in Bitcoin. Downside supports are going to be this 55,000 level, 51,000, and 45,000. If 45,000 breaks down, we're going to very likely see Bitcoin at $30,000 yet again. Now, the good news is if the bulls can hold up above support at 55,000, they can reset some of the overbought and overextended conditions in Bitcoin, and they could push for another leg higher. But right now, there's a lot of risk in Bitcoin if these support levels do break down. Upside resistance is still going to be 59,000 and that $62,500 price target. On Amazon, we saw a little bit of give back today, going down about 0.80% and closing right on top of the 5 EMA and back within the wedge. We did find resistance very close to that price target at $34.42, and that is going to be a very hard level for Amazon to break out above. But right now, we're still in a full bull trend, and the price action is still bullish, closing above the 5 EMA. So it does look like Amazon might try to make another push up towards that price target at $34.42. If Amazon can break above that level, the next price target is going to be at $34.83, with downside support right around $33.70. The next support level is right around $32.97, and then the 20 simple moving average is currently trading around $32.26. On Tesla, we dropped about 3.40% today, closing back below the 5 EMA, but still holding up above the 50 EMA, which is right around $6.98. We don't have a full bull trend yet, but we're getting very close to having one, with the 20 simple moving average starting to slope positive and possibly trying to make an attempt to close back above the 50 EMA. Tesla did find that resistance at the resistance trend line, and we've seen selling ever since. But we could make another attempt at that resistance breakout again, which is right around $768. Downside support is still going to be the 50 EMA right around 698, the 20 simple moving average at 679, and the resistance trendline breakout that we had down around $660. Upside resistance is going to be $720, $763, and then the 802 price target above. On Apple, we see the market moving stock carrying the stock market today and preventing a deeper sell-off, with Apple closing up over 0.5% today. Apple is doing a really good job holding up above this price target at 134, and we do have one more price target above, which is right around 137. Downside support is going to be 134, 130, and the gap close at 128. You could see tomorrow we should have that 20 simple moving average crossing back above the 50 EMA, and then Apple will be in a full bull trend. That doesn't mean it can't pull back, but that does mean that the trend is going to be pushing the price action higher, and that 20 simple moving average is going to be the strongest support for Apple. So right now, Apple is still looking very strong, and we would need to start seeing weakness in Apple if we are going to see a stock market correction. So right now, Apple is still pointing to wanting to get up to that price target around 137 before it sees a pullback. On the financial sector, we dropped about 0.25% today, but still closed over top of the 5 EMA, and we're still maintaining a very strong bull trend. On the industrial sector, we dropped about 0.40% today, closed right on top of the 5 EMA, and still maintaining that very strong bull trend. The healthcare sector was flat on the day today, closing above the 5 EMA and picking up a very strong bull trend as it continues to trend to new all-time highs. On the energy sector, we see it continuing to find support on top of that 50 EMA, and it does look like it's trying to get a breakout soon and go back into a bull trend and possibly push higher to all-time highs. Remember, if the energy sector breaks down below the 50 EMA, it could mean that it's going into a bear market. So going back to the S&P 500, we can still see that we have bullish sectors across the board, and we still have a VIX which is holding up below resistance. So we still have strong bull markets across the board in a low fear environment. That does favor all-time highs, but you also have to remember that we're due for a pullback, so a couple more days of selling would not be surprising. Watch the critical support levels that I gave you and continue to watch how the price action behaves at support and at resistance. Remember that this is just a pullback, and I am expecting to see another leg higher, so there's no reason to be overly bearish or be overly concerned with this pullback until we see something more drastic pick up in the selling. Right now, this is just completely normal pullback, completely healthy for all bull markets, and it allows the price action to reset so it can build a base of support and then go back up to new all-time highs. Remember, on the Stocks Channel Discord, I'm giving intraday updates to help you stay on the right side of the market and bringing you new trade ideas weekly. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. All right, next up, let's check in on our trade idea Shopify, and we see Shop did get beat up by the selling today, going down over 5%. We closed right below that 20 simple moving average, which should have been a strong support level, and it does look like Shop might want to close this gap below, which is right near our support level at 1111. You could see the price action closed back below all of the moving averages, and we did fail to hold up above that support level at the 50 EMA. So if the gap closes on Shopify and we break down below the support level at 1111, that will be a bearish indication that Shopify might want to go much lower. However, if we close the gap and we get a strong bounce off of that support level, that could be a good buying opportunity for the next attempt at the rest of these price targets. So this could be a buying opportunity pullback if this support level at 1111 holds up. Otherwise, it's going to be safer to get out and wait to see where Shopify finds the support level at. So right now, I'm favoring support right around 1111, but if that level does break down, it could be much worse and we could see more selling picking up. So we'll continue to follow Shopify going into earnings, and we still have quite a few price targets above that we have yet to meet. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.